Gotta remember to unmute the mic. Hi, everybody. Lawrence from financialthing.com back again, Thursday evening live stream. Hope you're all having a wonderful week. Going to be talking about peer-to-peer lending tonight. Of course, the big news, Ablrate winding down their loan book voluntarily. Very important piece of information there, voluntarily. Voluntarily is always a much better case scenario than involuntary. Involuntarily usually means some kind of a financial distress leading to an administration situation, but voluntarily, much better to hear that than involuntarily. So we're going to chat about that. We're going to look at their press release. I have reached out to David Bradley Ward of Ablrate and asked him to come on the stream and tell us what's going on, which we'll see if that happens in the future. I think he's very busy, obviously, dealing with the matters at hand at Ablrate. But he may be watching tonight. David, if you are watching, please feel free, come on the stream, let everybody know what is going on, because obviously we don't want to speculate too much. We always want to hear things from the horse's mouth if we can. A lot of times people don't want to do that, but the offer is open. David has always been very kind and obliging when it comes to coming on the stream. So my goal this evening is not to speculate, more to present an opinion of what is going on with Ablrate. I don't know if anybody out there has money on the platform. I have a little bit, had a very small amount. And so, yeah, we'll chat about that. If you can hit the thumbs up, please do so. That really helps out the stream a lot. Cheers to you for hitting the thumbs up. And, yeah, let's have a quick hi to everybody who is watching. Richard McDougall is here. Coindex email 40% on USD stablecoin. We're not really going to talk about cryptocurrency tonight, but don't fall for that kind of stuff, okay? Anything that's offering that kind of interest is no bueno. Stephen Hale from Nottingham. Hi, Stephen. Colin is here in the Peak District. Hopefully it's not too burning hot up there. Annabelle, Nyron, Drippy Humid España. Guten Tag, ¿Cómo estás? Wrong language. Evening from Peter and Leatherhead. Radical tropical temperatures. Yeah, it's very hot here in Florida. It's pretty much been in the mid-30s. You cannot hear me. Why can you not hear me? You should be able to hear me. Let me know if you can hear me, everybody, please. Can't hear you. Okay. Should be able to hear me. David Dawson is here in Barlaston. Where is Barlaston? Paul Bagworth, of course, in Kenilworth. Invest22 is here. And AccuChap, of course, in Accrington. Mike Powell's here in Southampton. I'm making an assumption there, Mike. I presume you're still in Southampton. Just let me know if you can hear me okay. I presume you would have hit a bunch of thumbs downs if you couldn't hear me. I think I got everything turned on, so I can hear. Good. AccuChap, the guy with the sonic hearing. Anyway, let's dive into things right away. And Staffordshire, okay, very nice. Home of the Staffordshire Terrier. That's about all I know about Staffordshire. So we're going to take a look at David and Ablrate's press release. It came through very recently. And just kind of go through it, give my thoughts and feelings about what's going on. 8 years ago this month, on July 14th, 2014, was the official opening day of the Ablrate platform. Since that day, we've done our best to provide good returns to investors and innovate in the peer-to-peer space. It's with regret that I am informing you of our decision to execute the orderly wind down, very important word there, orderly, wind down of the Ablrate loan book and its peer-to-peer activities. First, let me say this. We are not going out of business. That's a very important point. Oops, I did not want to do that. Let me turn that off. We are not going out of business. Very important. This has been a voluntary restriction we have placed upon ourselves. We will continue to work until the loan book is settled. We have a reasonable outlook financially as we continue to receive our commission element from loans that are paying or settling, as well as recovering direct costs from others. So the business, barring any outside financial pressure, should be able to continue with loan recoveries until the loan book is settled or brought to a conclusion. Well, that's very promising words to start out with. It basically means that the loan book will just continue as normal. People can hopefully continue to pay back capital and interest payments as they are received and get paid out to you in your account as an Ablrate holder, unless obviously your loan is in financial difficulty. Then that would be in recovery. There are a few loans that are like that. So good start to the, what would you call this, a news update? The decision to put in place a voluntary restriction to not take on new customers amongst other commitments. The FCA has been notified and Ablrate remains an FCA-regulated firm and will continue to be so until the process is complete. This decision has not been taken lightly. I'd like to explain why we are on this path. It is a combination of economic outlet, some of the challenges on our loan book, and regulatory trajectory. It's a challenging environment for small businesses. Interest rates are likely to rise, putting pressure on incomes, and already retail sales are being hit, putting pressure on the wider economic outlook. Strikes and resultant potential wage hikes may fuel inflation in the short term and add to the volatility of the economy, adding additional risk to lenders and our business. An element of the loan book, this is important, an element of the loan book, as you know, has seen some challenges, and we are expending a huge amount of time sorting out a few of the borrowers. Well, welcome to peer-to-peer lending, right? You have loans that run into trouble, and as a peer-to-peer company, you got to sort them out. That's just part of the business. It's something that peer-to-peer companies have been dealing with, all of them. I don't think there's any that doesn't deal with loans that are having trouble. Fortunately, we have stabilized some loans, and we can see the light on the servicing and settlement of these loans. There are also loans from a small number of borrowers we cannot recover from our own efforts. I know this from first-hand experience because I am invested in one such loan. So collection of these has been passed to insolvency specialists, and inevitably there may be others that enter the process as the collection procedure continues. When loans enter this recovery process, our work does not stop, and we feel our small team is better focused now on recovery of those loans than new business. A consequence of the wind down is that the loan exchange, that's the secondary market, will not reopen. As you know, that was suspended a few weeks ago as a result of the FCA. There are some borrowers on the platform that are exploring other ways their loans could be traded, and we are assisting them with this. Lastly, the peer-to-peer industry was an excellent innovation and something designed to allow lenders to have the opportunity to gain good gains by lending directly to small companies and consumers. Light touch regulation allowed the industry to grow, but some failures in the peer-to-peer industry and the wider alternative finance industry prompted a review of the space, and further regulations followed with a complete ban on the mini bond market, for example. Basically, it goes on to say that Ablrate has read the consultation documents on future FCA changes, possible regulations that are coming, and they are saying it's their opinion that it is likely things like instant returns will be banned, something that some of the peer-to-peer lending companies do. You pledge to a loan, you return, you get instant returns. That's likely to be banned, in Ablrate's opinion. There further restrictions are coming, and put all this together commercially, it's difficult. to ascertain where the trajectory ends on these FCA changes. So obviously Ablrate feels that these changes are going to negatively affect them, which is one of the reasons why they're entering this voluntary wind down. The FCA's job is to protect customers from what they see as potential harm. So more restrictions and rules is always going to be a factor. We have not always agreed with the FCA on their interpretation of the rules, nor their implementation of some of them. However, we always had cordial relationships with the FCA regulator and respect the fact they have a job to do. It's a combination that the above factors, not any one individually, that has created an environment where it's the director's opinion that an orderly wind down of the company's peer-to-peer activities is best for lenders and best for our business. There's a section on operational arrangements. You will be able to continue to access your account, obviously. That will remain unchanged. You'll continue to access your account in a normal manner. There will no longer be any new loans, and they encourage you to withdraw any surplus cash that's sitting in your account. Standard monthly interest capital settlement payments will continue in the manner that has been continuing. Withdrawals will be processed twice weekly with the effect from the 1st of August. You'll still be able to do a tax statement, and talks about ISA. To withdraw any cash balance from your ISA to use a designated bank account, you should follow the normal withdrawal process. You should be aware that this type of withdrawal will result in the loss of the ISA tax-free wrapper. To maintain the wrapper of your ISA, funds can be transferred to a new ISA provider. So make sure if you are doing that, you do pay attention to how you're doing it. Make sure you want to keep that tax wrapper in place. Ablrate will waive our standard fee and cover the cost of the first transfer out of your IFISA account in each financial year. Thereafter, our usual fee will apply. Ablrate will be having a smaller team. Your SIP. Any withdrawals will continue to be paid to your designated SIP provider's bank account via the normal process. Adjustment in service levels. Ablrate is reducing their team, so their replies may take a little bit longer. And then there's the contact information. You will continue to get communication. Wind down plan lays out certain actions that may happen in the event of a wind down. We are reviewing this plan with fiscal compliance and aim to update lenders on the wind down plan when those have been formalized. Does not affect the way we are dealing with your loans and does not delay repayments. And if you have complaints, you can email them. We cannot, this is very important, they are trying to get the best result through the wind down of the loan book, but they cannot guarantee full recovery by the time the book is closed, but they aim to have wrung everything out of it for lenders. It's interesting last line. We cannot promise full recovery, but by the time the book is closed, we aim to have wrung everything out of it for lenders. So there you go. Rest in peace, future Ablrate loans. Ablrate was the last of the really high interest paying companies within the peer-to-peer sector in the UK. We still have some companies like that in Europe. So a really sad day. I mean, you also have to think about, yes, if you have money on there, you become a little bit concerned how this is going to play out. Voluntary wind-up is a good thing. But you also have to take a minute to think about, David and his team. They've put, 8 years plus of their time, money, blood, sweat, and tears into this business. And, I know I've had business failures in the past. I'm not saying this is necessarily a failure. This is actually a very responsible action that Ablrate is taking if they see potential issues in the future, FCA headwinds. Maybe it's been more challenging to get new loans. I don't know. Again, I'm speculating here, but I know that the environment of peer-to-peer has been challenging, and especially in Ablrate's case, they have very specialized loans. There probably is not as many of them out there, So maybe it's been more challenging than to write good quality loans. And you get this culmination of these factors where you look at your business and go, is this really a business that is able to continue into the future? Because I think the last thing that most peer-to-peer lending companies want is to go into involuntary administration, because it affects you as an investor. I know David cares deeply about investment, his investors, and the money that they've put in. And hats off to him. I know it must be a very difficult time. It's unfortunate. We're in extremely volatile and difficult economic times at the moment. I'm actually surprised things are going as well as they have. I expect in the future the economic times are going to get more difficult as time goes on. Interest rates continue to rise, and inflation continues to creep up too. So thoughts go out to David and his team. It's unfortunate. Hopefully they will be able to continue to service this loan book and repay everybody as best as they can. There is no guarantee with that. These are very specialized loans. If you're not an investor in Ablrate, you're going to see that the type of loans that they have, they're just not kind of your standard loans that you're going to see on other websites. I'll show you some of the loans here. You've got baskets of commercial secured loans. You've got development financing, power site, working capital loans, residential lodge, what is this, cabin stock, energy projects. And the way that the Ablrate originally began was doing aircraft financing to either buy old aircrafts that were going to be decommissioned, sold off for parts, or just aircraft leasing. Wow, I recognize this, Martello Park. I think that's in Dorset, where I live. So you've got even a third charge loan here paying 14%. Leisure resort developments. You get a variety of different types of loans. They're very, very specialized, a lot different to some of the other peer-to-peer lending companies out there. And if I show you my own account, again, I have a very small balance on Ablrate. As you can see, the different types of loan that I have invested in throughout my time. And there was one on here. Where is it? See if I can find it. I think it was this one right here. This is the one that ran into trouble for me. This was a loan from 2016. These shipping containers that, if my memory serves me correctly, they just disappeared. These containers were not around anymore, and this has still been ongoing. We see the last update was posted in May of 2022, and this started running into trouble back in 2017. So that just goes to show how long it can take for loans that go into trouble in peer-to-peer to either be resolved or be completely washed out with no gain. So that's 5 years this has been ongoing. This was back in my young and dumb peer-to-peer lending investment days, where I probably didn't really understand what I was investing in, but I thought shipping containers were easily used as security. Apparently this borrower decided to make the shipping containers disappear. But yeah, there's a few loans here that are continuing to either wind down or not, depending. Let's have a look at one of these other ones. Admin notes. Fielding offers on the pub. This was a default This has been going on since 2019. So yeah, it's kind of, again, you're dealing with very high interest, possibilities of 13%, 12, 13, 14%. That comes risk with that. You don't get anything for now in this world if you're going to invest in loans that are paying high interest. Remember, the borrower is paying more than what you're receiving. So if you've ever taken out a loan before, you know that you are assessed risk based on interest rates most of the time. So if your interest rate is higher, you are considered a higher risk. But you see I have 1, 2, 3, 4 loans out of the portfolio that are in the orange. That means that are being worked on or are not coming in as timely payments. So anyway, sad situation. Again, I don't ever like to see this happening. It's never a fun thing to report another company that is going to not be offering new loans. It's good it's not an administration, but again, David, if you'd like to come on the stream, please come on one day and chat about, give us a clear, transparent view of what's going on with Ablrate for investors out there, so they can see what's happening. We'll see. I can tell you that my days of investing in high interest rate peer-to-peer lending is probably over at this point. I kind of knew it was for a while. I don't mind doing the usual, the usual companies that I've been talking about on the top 5 list that I consider to be either lower risk. Again, risk is all subjective, but in peer-to-peer lending, lower risk. I'll probably continue to still invest through those, but anything higher risk, over 9 or 10%, very, very cautious, and I personally am steering away from anything because these companies just don't have good track record of being able to exist long term without some of these loans just getting turned upside down. So proceed with caution if you're investing out there. Go with good companies that have good, solid track records, solid people running the companies. Never had any reason to doubt that David has not been doing the right thing on the back end. It's very hard to tell. We don't always know what goes on behind closed doors, but let me see if you have any comments. Good evening, George Batchelor from Bridlington. Mike says, too many loans to too few borrowers, and every loan is linked to either AF or companies backed by one of the Ablrate backers. Yeah, that's a real problem, in peer-to-peer. If you lend to too few lenders, when one lender runs into trouble, that lender may have multiple loans on a loan book, and it'd take your whole business down. That's why diversification is important. Not only as you as an investor, but also for the peer-to-peer lending companies lending out money. Don't give too much to one bloke. Yeah. Anyway, let's continue. Let's talk about some other news. But I really do wish David the best. And if you have money on the platform, don't freak out. Loan book is still going to continue to be serviced in exactly the same way that it was if they were not in the wind down process. So don't freak out yet. This is not a lendy situation. This is not a money thing situation. It's different. So all we can do is hope for the best and hope that money is recovered and the loans are repaid in an orderly fashion, as has been reported. PropLend posts a 40% rise in revenues in 2021. PropLend, one of the companies I think is doing a good job. Brian Bartaby, who has been on, excuse me. I just want to tell you, this cough, I'm pretty sure I had COVID about 3 weeks ago, even though tested negatively. I don't know if those tests are accurate or not, but this cough is just not going away. So if I cough into the mic, please excuse me. I'll try not to do it too loud. So Brian Bartleby has heralded 2021 as a good year for the platform as it grew its revenues by 40% and neared profitability. So that means they haven't reached it yet because they reported a move from a £193,244 loss in the year to 31st of December to a £148 loss in 2021. So they're going in the right direction. They had a £238,000 loss. 2019 loan volumes in 2021 were up 77%, revenue up 40%. Everything is heading in the right direction. 2022 has started well. We continue to grow this year. They've got 11 employees. Always good to keep an eye on things like this because we want to make sure these companies are heading in the right direction towards profitability. Okay, so the government is saying that these bounce back loans, arrears, are worse than they originally admitted. The number of small businesses in arrear after taking out a government-backed bounce-back loan is now thought to be 193,000. That is crazy. The BBC or the BBB or the Times has revealed that as many as 1 in 8 of the 1.5 million small businesses that took advantage of the bounce-back loan scheme are now in arrears. But the crazy thing is they are going to relaunch the RLS recovery loan scheme in August for 2 years. So, there's a good example of your government printing money. These two loan schemes are a little different, but not entirely different. Government is still taking on the 70% of these loan liabilities, and they're just giving out more money. There's going to be other problems. It's really, it's irritating to me to see that we're having all of these problems with money printing, and then the government still is continuing to really artificially prop up, businesses with debt that they obviously are not going to be paid back, some of them, and then you as the taxpayer are going to get the brunt of any of these defaults where the government is paying for 70% of these loans. So vote, people, when you can, because some of these politicians, it's very, very crazy. A kind of a quiet week for peer-to-peer news. The money platform grew lending volumes by 83% last year, so they reported. In the 12 months ending the 31st of January 2022, the money platform achieved more than £1 million of revenue, which is 260% higher than pre-COVID levels, ending 31st of January 2020. So it looks like the money platform seems to be heading in the right direction. I don't know. I'm not really familiar with that company. I haven't really dived into them. But thinking about the Ablrate situation, now we've had, so many platforms that have either involuntarily or voluntarily gone into a wind down or administration. The email that I keep getting every week from different people is, where do I invest now? Is it safe? Is peer-to-peer lending still appropriate? Is this still a place that I can put my money? I've had money and transparently, as you know, collateral, funding secure, money thing, Lendy, a little bit in the house crowd. And it's easy to get a feeling as if it's not a particularly safe sector to put your money. If we have so many failures, is it a good place to still be investing? And I think the answer to that is, in certain cases, certain companies are doing the right thing and are showing that they can historically provide decent returns and make the correct steps. And I think this is just something that is so important. is to really look at the companies, look at their financial statements. If you want, you can go on a clearing house, company's house, look at their look at their tax, their revenue statements, their profit and losses. You see kind of where they're at, but nothing has really changed for me as far as my view on peer-to-peer lending. Not particularly excited about delving into new ventures at the moment. I think the top 5 that I've always written has really maintained the same. Nothing has really changed. The companies that I think are doing the right thing right now, we got Loanpad. Things I like about them: you get paid interest every day. The rates are nothing to really write home about. You're not going to beat inflation, 3%, 4.1%, but you have about as low a risk as you can get in peer-to-peer to get these type of interest rates. Daily access to your money at 3%. That gap between bank and peer-to-peer is getting smaller though now at this point. So we're seeing rates in savings accounts of 1.3%. So now you're only talking about 1.7% difference between Loanpad's classic account, which is why now I'm using the premium account to get that 4.1%. I think that's a better deal for 60-day access. Comes with a little bit more risk, but I think Loanpad is one of the least risky peer-to-peer lending platforms out there. Again, not financial advice. Do your own research. We got LendInvest. LendInvest is not technically a peer-to-peer company, but they offer a really good product. That they have the history of, lending £4.4 billion plus. They're paying between 4 and 7%. I do not do the secure bonds. I stay with the self-select side of things. Now you have to invest from £5,000 now if you're not somebody who invested and was grandfathered into the lower amount. Personally, I would stay away from these secured bonds. Do not like them. Don't think it's worth it. Never been a bond fan. But I think LendInvest is doing a good job. Now we go into that mid-tier risk. Gets a little bit higher, crowd property. Problem with them, demand and supply. Too much money on the platform, looking for places to go. Not enough loans. But they've been doing a good job as far as their investments. Okay, now, of course, nothing is perfect. These guys are not perfect. There are going to be some blips with the loans. I fully expect that. Next, we have sort of the black sheep of peer-to-peer, Unbolted, doing these personal business loans. We do gold loans, bridge loans. Again, you're going to that higher risk area where you're getting paid a little bit more in returns, but this has been a business that's kind of stuck to what they have been doing for a long time, and they seem to be running okay at the moment. Again, no guarantee. I mean, all it takes with any one of these peer-to-peer companies is one cock up. They lend out to the wrong person who maybe has too many loans on the platform that could put them in trouble. But if we look historically, Unbolted has had a pretty steady track record for the type of returns you can get. I would diversify into something like this, but I would definitely not put my eggs into one basket. So don't over invest. Then we got Blend Network. I think Jan over at Blend is got a really good track record of finding good investments, finding good loans to give to you. Again, difficult part of Blend is too much money supply, not enough demand. That's just part of when you get a good quality product, that's going to happen. There's going to be too much money, people looking for places to put their money, and not enough loan demand. This is what experiences with Blend. You can see here everything is funded, so not much available. You have to have very fast trigger fingers, but I like what Blend is doing. Then we go into kind of my last company that I kind of have mixed feelings about Assets Capital, to be honest with you. I see a lot of mixed things going on there. I'm not saying there's anything necessarily wrong. Things are starting to fire back up with regards to the accounts, with the access accounts. But you know, a lot of my loans on here that I manually selected a long time ago are what I call maybe troubled loans, whereas maybe they're past due, they are being collected, some of them are in default. Good thing I like about assets is they're collecting money towards capital, not just paying you interest along the way. So as you get your capital payments, it reduces risk. But assets is a pretty big business, you know. I mean, all it could take is one misstep and something could go wrong. But they do have this track record. They got 41,000 investors. How many active? I don't know what that number is. Usually not everybody is active. They've lent 1.5 billion total retail institutional funds lent to UK businesses and 202 million pounds of gross interest. So they're still continuing. What I don't like, it's my biggest pet peeve about assets capital, it bugs the hell out of me, is it's how complicated their back end can be. You know, I just, it's not the worst in the world. I think crowd property doesn't have the greatest back end as far as usability of being able to invest and kind of navigate your way around, but assets is another one that I don't find particularly easy, along with Kuflink. But they have a more difficult, kind of a more advanced product, so I guess that's why they have a more advanced user experience on the back end. Then we have Assets Exchange, smaller company working in tandem with Assets Capital. I like what Peter is doing over there. I think there's a good amount of social goodness that goes into this because they're doing charity leases and actually giving something back by providing housing to people that desperately need it on long-term leases. So one of the issues with Assets Exchange, it's a smaller company, so they don't have a ton of options for lending and a ton of, you know, loans for you to be able to put your money into. But when they do come up, you got to grab them quickly. I like the social element of goodness that they are doing. So that would kind of be on my last sort of towards the end of where I think, you know, you'd be okay. Again, not financial advice. Please do your own research. But if I was looking for places to put money, Assets Exchange would be on my radar, and also Plend would be there too. I like what Robert is doing. Give him a shout out. Again, not sure what these guys are so happy about. Being in debt wouldn't make me that happy, but they seem to be happy borrowing from Plend. You can, then they're not technically open yet, but coming in the future, once they fully launch, you'll be able to invest in unsecured personal finance loans, where Plend has a very, very unique way of assessing risk and assessing credit of the borrowers. And then last but not least, as we mentioned about PropLend, I think that would be another place I would look. They have Cloudflare to make sure you're not a hacker when you log in. But they seem to be, again, on the right path of right experience. Brian, I think, knows what he's doing when it comes to commercial property. It's kind of a unique niche. Not doing residential, and pays towards the higher end. If you're looking at the 12%, make sure you understand what you're taking on risk-wise as a lender. But they're saying average return on capital for all platform loans during 2020 was 7.26, so decent. Not sure when I have for 2021 on there. Maybe they haven't got those numbers yet. And then we'll do one more, last but not least, Kuflink. Let's see what we got on there. If you look on the select loans, tons of availability. You can see here, all of these loans are available. So if you need a place to put money, There's a ton. But again, make sure you do your own research. Not all of these loans are going to be good ones. You got some good, you got some bad. But they have financed and borrowed, given to borrowers a lot of loans. It's just been a lot of repayments. If you go here, up at the top, you can see repaid. These are all the loans that have been repaid. There is 535 pages or items of repaid loans. So good track record that they have been able to get loans repaid. It's very important. You want to know that a peer-to-peer company can get their money back that they lend out. Kuflink does have that track record. Just keeps on going and going and going. So good history. Narinder and his team knows what they're doing. I've been to visit them several times. And they do have that history of experience when it comes to property and being in the property investment business themselves. Having done it themselves, they know what they're doing. So, for every company that winds down or fails, there are some good ones out there. There are some ones that we hope will continue to thrive in the future with peer-to-peer. Myself as well, as I'm sure you do not want to see this sector disappear or collapse. We hope for the best. There's no guarantees like with anything. Look at the stock market right now. There's no guarantees. Nothing is going to be perfect all the time. This peer-to-peer has taken, a pretty bad beating over the last 3 years, but there is hope out there, and there is some good, solid companies that are doing business in the space, offering you a place to get returns that is a lot better than sticking your money in the bank and getting eaten away by 9% plus inflation. So, that's what I got for you this week. So if you have any interesting comments out there, I hope you're enjoying the stream. Please hit that thumbs up if you like it, and subscribe if you're not a subscriber. I know some of you are not actually subscribed to the channel, but subscribe and hit that little bell, and it will tell you when I go live. Best answer: my top 5: Loanpad, Propland, Craft Property, Kuflink, and Invest and Fund. Dave Dawson, not happy about unbolted lowering interest rate on business loans. Don't know why. Agree with Invest22. All of Lawrence's top selection I agree with, except Assets Capital. They wouldn't be in my top 5. Too many defaultive loans. Charge too high fees to lenders to recover loans. Okay. Richard says, diversified portfolio over multiple peer-to-peer loans and multiple lenders is essential to lessen overall risk, but research is needed. First security loans better. Actually, definitely watch out for second charge loans. Be sure you know what you're getting into. Capital stackers. Okay. Let's have a look. Capital stackers. Yeah, I've never looked into them. I like the names, kind of cool. Capital stackers. What you got, capital stackers? What you got for me? Profit, equity, capital stack. Return 14.96%. It's a lot. How can they pay so much? Always ask. That should be the first question you're asking. How can a company afford to pay you 14.96%? So if they are able to pay you 14.96%, if that is what you're getting paid, if I'm reading this right, what are they charging the borrower? Be careful. I don't know anything about this company, but I always say, be careful. Let's look at the portfolio statistics. Always dive into the statistics, people. That can tell a good story. Look at this. They have an £11.3 million loan book. Small. $27.1 million cumulative. So that means that with the current and the repaid, that's $27.1 million. They've written 11. They've got 13 current deals, 29 repaid. Average investment is high. Look at that, 91,000. That's big. Highest return, 24.97. So they must have some kind of profit share. But yeah, so just do your research. Look at the stats. Look how big their loan book is. Look at how long they've been in business for. Look at who's running the companies. The people running the companies, very important. Proplen do a good job. I agree. Somo would be in my top 5. Easy Money, very good. Okay, I think that's going to wrap it up. Thank you to everybody. We made it under an hour. I thought it was going to be a lot shorter. Thank you for joining me. I'm hoping to be back next week. May do an impromptu stock and crypto stream next Tuesday. Don't know yet. Depends on what's going on in the life here. But thank you kindly. Honestly, I very much appreciate you all being here. Hope you enjoyed the stream. Hit the thumbs up if you can. It's just that little button under there, down there, I think it is. The little thumb. Just whack it. Doesn't take you a minute. And yeah, have a great weekend, everybody. Don't melt in that heat. Again, David, if you're watching out there, best wishes to you. Hope everything goes well with the wind down of Ablrate, and honestly, really wish you nothing but the best. But I'll see you guys next week, and that's it for now.